Hi, this is James Eng with Old Capital, and today we are here with Chris Stutzman of Transwestern, and he is based down in Austin at one of my favorite markets, and so I wanted to bring him on today to talk about the market and what he's seeing. So, Chris, thanks for joining.
Absolutely. Thanks for having me.
Yeah, so we're going to jump in. Both Chris and I went to school at UT, and so we have a love for Austin. And I guess it has a different name now. So I pulled this slide. They're calling it Silicon Hills. So give us a little overview of sort of how Austin lays out, and sort of what is driving the growth, and what's driving the insanity down there, Chris.
That's a good question. I don't know if anybody really knows. Yeah, it's just, the Silicon Hills moniker we've got. We just continue to see just the job growth in the high tech world, with relocations, startups here, and to me, it all kind of goes back, obviously, to, oversimplified. It starts with Dell. I mean, I think sometimes Dell doesn't get enough credit for just the driver that they were, back in the 90s when they were just blowing and going. And then, fast forward to now, we've got so many just well-known companies that are here and just continue to keep moving here.
Yeah, I mean, when you and I went to school there, Dell was sort of like the only guy in town,
Yeah.
and
Yeah.
you went to UT. Dell would be the only company that, if you stayed in Austin, Dell was the company you worked for. Like if you,
Yeah. It was, yeah. If you were
yeah,
fortunate to, and the growth that they were going through at the time was great because a lot of people got hired on, and obviously, the term that gets thrown around here forever is that, so many Dellionaires were created during that time frame. But yeah, I've always just kind of said this to people. I go, I just don't ever feel like Dell just receives a credit that they probably deserve for just really putting Austin on the fast track, and really being that 800-pound gorilla that started to bring in the other 800-pound gorillas that we now have here.
so talk about like in Dallas, we're starting to see, we sort of call it like the barbell effect of these different downtowns.
Hmm.
And when you look at Austin downtown, talk about sort of the companies there, sort of dynamics there, and then really sort of out in the domain where Apple is,
Hmm.
and some of the larger companies. You see that, like two downtown infrastructure, and then maybe touch on where Oracle's going to be and where Tesla's going to be.
Yeah, so downtown Austin was, it's been interesting. Just I've been fortunate. I date myself saying I came to school here in '92, and then aside from a couple of summers, never left. And was fortunate at the time to get to stay here, because when I graduated, it was either you kind of went to Dallas or Houston to get a job, unless you were fortunate to hop on with Dell if you were going in that direction. Uh, as we all know in the real estate world, you don't have to be a genius to do this. So you kind of just fall back into your job. So I was fortunate to stay here and do that. So I've got to watch downtown just grow into what it is now, where, back in that time frame, no one even lived downtown. You had one or two very small little complexes. So as it's grown and matured, it's gone from everything from, sort of every type of business sector being downtown to, one time it was sort of heavily with the law firms, to where now it's really driven by the tech firms. So you've obviously Google's under construction with their massive building. Facebook has a huge presence. And then with the domain, as you kind of, I don't know if you refer to it, but we call it our second downtown now, which has just continued to just grow and explode. You've got a lot of the firms up there, and then you're going to get into where Apple's got their campus under construction. Oracle obviously has their campus over on the Riverside corridor. So some of these firms that have a much larger presence, they're not contained themselves into one building. They're going for a campus feel. At the end of the day, who's to say we might have a few more that show up and follow that path? But it's just been interesting really to see that growth go. And then obviously with Tesla, the gigafactory that they're doing out in far southeast Austin, really creating a big interest in that area as well too, which really hadn't seen much in ever. It'd been quite a while.
Yeah, I mean, we were talking about how Dallas is just sort of a maze of highways and
Hmm.
loops and things like that. But I mean, really, from Austin downtown, you have sort of I-35 going north, up to
Hmm.
Dallas, and then Mopac, and then sort of the cross are sort of 290,
Yep.
183, and then
Yep.
45. And all those different pockets are having companies move into, whether it's Samsung sort of on the east side,
Yep.
Dell further north, and then you've got Apple up in northwest, and
Hmm.
then Tesla in the southeast. So I mean, when we went to school there, it was sort of Austin. UT Austin was downtown, and then there was sort of the Capitol, and that was about it. But
Yep.
now they've got the medical center that they're
Yep.
building down there, and then I have no idea how many high rises there are in Austin. But the last time I was there, the Fairmont was a 30-story office, or sorry, hotel.
Hmm.
And the number of high rises going in downtown Austin is just
Yeah, the number of cranes. And honestly, I live here and I lose track. And it was it was funny the other day. We were looking at something and this picture came across of a downtown. I remember looking at it going, "Where's that?" And we're
right.
like, "Oh, that's Austin." I mean,
That's awesome. Yeah.
I've gotten to where I don't even recognize it that much anymore. It used to be, when we were in school, you had your call it your three downtown high rises that were sort of the staples. 100, 101 Congress, and then One America Center were sort of those three that you knew, and it just defined Austin. And then you throw the Capitol back there,
Right.
and then the Frost Tower got built, and I kind of started the change, and then now it's yeah, it's a different look, and it'll look different 12 months from now.
Yeah. So everyone's got the economic drivers. So when people ask where's the demand, just look at this
Hmm.
picture. That's the demand, because
Hmm.
obviously with the number of jobs coming in, the next story is all right. So what about multifamily, right?
Yeah.
So here's a snapshot from a recent sort of market report you guys put together. So maybe touch on some of these things and how they're impacting with all the jobs, all the population growth coming in. How
Hmm.
is it impacting multifamily right now in Austin?
It's driving it, and it's so these numbers we've got in front of us were from our fourth quarter report, and we pretty much will focus on one quarter, and then we'll look at the trailing 12 months. Um, so this one obviously is a snapshot of 2020, which probably at the end of the day is not going to be the best to ever look at to kind of show the path of progress and the growth that we're seeing here. These numbers probably look quite a bit different 12 months from now, especially on the occupancy number. I think obviously rents will be creeping up quite a bit, but yeah, I mean, just that growth that we're experiencing has typically always, you feel like, okay, that's really always going to benefit multifamily. The single family sector here is at what people call historically low levels of inventory, which are just driving prices higher than they've ever seen. And we are now beginning to see that translate over into multi. Because last year, just with every market, I think we saw some downturns. Austin wasn't exempt from that, but now with 2020 rolling, we're starting to see those numbers really pick back up again, which is great.
So do you think it was like the new development or the amount of new development? Because sort of if you start at, I'm just looking at sort of the beginning of 2020, rental rates around 1330, and then you're ending the year at about 1260.
Hmm.
What do you think drove sort of the decline in rents? Was it just the amount of supply that came on, or what do you think it was?
It was two factors. It was just we've one thing that, and this is going back, I don't know, call it 5, 6, 7 years, even longer. As you had demand in Austin and new investors coming in, the one red flag that always sort of popped up for most people was the development pipeline. You guys have got a lot of units under construction. And historically, we always had just north of about 20,000 units physically under construction for the MSA, but those were always absorbed. So it was never really an issue. That was just sort of the one thing that kind of put pause for anybody. And then that number, obviously, as Austin continued to grow, that number started getting a little bit bigger. More developers were showing up. But obviously last year, and I think, again, Austin wasn't the only market that experienced this, is we had a good number of properties that were under construction. So these deals weren't stopping. They were going to finish. You introduced the whole pandemic and just the shutdown that we experienced. That was just kind of the whammy where you had that demand all of a sudden wasn't there. And we really saw it on the core locations, the high rises, mid rises, central Austin. You kind of touched on those boundaries earlier. You've got I-35 on the east, Mopac on the west, Ben White 290 on the south, and 183 Research on the north. That's sort of your kind of funny shaped rectangle that are sort of our core submarkets. And there's a few outliers outside of those, but if you focus on that area, the high rise and mid rise properties really started to feel some pain. And we started seeing that rent drop there. And I think that's really what it was. But now it's been interesting to go back and look at some of the properties. There was one particular property we worked on last year that was a mid-rise that they finished construction. I think they finished their punch out list about February of last year, started going through their lease up. And they weren't the only one. Pretty much every property that was starting to go through a lease up just was at a snail's pace because everybody just, like the world, just hit pause. So once we sort of got through it, understood what we were dealing with, realized, okay, people are paying rent, demand started to return. And so this property then finally just boom leased up. So we are beginning to see those infill locations reach stabilization, which is great.
You can see it here on just the absorption in the second quarter on the bottom chart. I mean, pretty much when you can't go outside of your house, it's pretty hard to lease units sometimes.
It's hard to do.
Absorption,
Exactly.
And it seems like Q3, Q4 sort of picked up. And I think as sort of Texas opens up, more people can get out. That's gonna be absorbed. So that's more on the sort of at a glance. And then, you know, I think I saw in Q4, 2020, it was one of the biggest in terms of properties traded. There was sort of a lull Q2 of 2020, and then Q3 and Q4, it sort of all came back. So talk about sort of sales volume and sort of pricing per door, because I think Austin's probably the most expensive market in Texas. And sort of talk about sort of if you had A, B, C sort of price per door, and talk about what's trading right now.
Yeah. So kind of like you said, so if you kind of look at last year by quarter, 2021, Q1 had some closings, which were deals that were, pretty much at the finish line. And then when COVID hit and the pandemic started, it just like I said, all the capital just kind of hit pause. A lot of deals fell out. Everybody got on the sidelines. So Q2, there really was hardly much. Q3, by then, I think people started to kind of get a feel for, okay, things are not going to be as bad as we think they are. People actually are paying rent. So you started getting that pent up demand, I would say. I remember, when the pandemic hit, the first thing we were doing was just reaching out to groups that we knew that were active and going, what are you guys doing? Like, well, we're talking to our lenders right now. So that was sort of the case for everybody. But their comment was, hey, if you find a great deal, let me know. I think a lot of people felt like there might be a little bit of pain, some blood in the streets. And we quickly realized that wasn't going to be the case. So also, the capital never went anywhere. So all this capital that was sitting on the sidelines started getting pretty pent up. And then they decided, okay, we've got to get back in the game. And sort of then it was, at a micro level, it felt like, go back to late 2010, early 2011, where coming out of the Great Recession time frame, it was like the light switch got flipped on and it was off and everybody was back transacting again.
Yeah, the light switch was off for like 2 months.
Yeah,
it came back.
Exactly.
So
as opposed to 2 years the last time around.
Yeah. Like people always ask me like, so is it buyer's market right now? And I said it was for two months. If you weren't buying in like April, May, June of last year, then it got switched back. So I'm just looking through some of these stats that you guys had, and rough sort of, let's say class C, you're looking at 125 a door on a T12. Class B, sort of 1980s, you're maybe 130 a door, and then your A minus stuff, 175. And then your newer stuff is, north of 200 a door for Austin. Okay.
Yeah. And again, those are sort of the averages. So they'll vary from, depending on the submarket you're in. And, as you know, each deal is different. So, but those, there's a little bit of a range in there. And we're just seeing, we're seeing pricing in Austin continue to increase. I mean, on a cap rate wise, I never thought I'd ever say this. It did come out of my mouth, but we're talking about, cap rates in Austin, sub fours now, right. Some are 3.5 now. And some are pushing below that.
Where are you seeing the most competition? Is it A, B, or C?
I would say, I don't want to take the easier route and say it's sort of spread across all of it. I mean, prior to COVID, the demand was really I would say it really started ramping up in that C level, called that workforce housing. And then when COVID hit, obviously those properties maintain their occupancy well, but we also know those are the properties that suffered the most with rental payments. They maintained and did okay, and I think they'll be fine at the end of the day. So that demand is still there, just as Austin has continued to become, as you alluded to before, one of the most expensive markets in Texas. It makes it tough to live here. Affordability is always an issue. So there's always that demand for that workforce housing property. But again, flipping to the other side, you've got brand new product, institutional level, that demand's always there. And then you still have that value add play that feel like that's always what everyone's looking for. And in Austin, that's really shifted from that 80s vintage product to, everyone's okay, let me get some 90s, early 2000s. So really anything from the early 90s to, call it late 2000s is really that sweet spot, which is pretty large sweet spot. It's almost 2 decades worth of kind of the demand for value add play.
Yeah. I mean, I wish there was more 90s and 2000s product.
Yeah.
I mean, I think there was just a ton built in the 80s in Texas. And so there's just a lot of product that hit the ground. And so when you're saying, hey, find me a 90s, 2000, 9-foot ceiling, individual HVAC deal, everyone looks at you and says, there's not that much product. And so
so true.
There's a deal in DFW.
The 90s is what everybody wants. And there was, it's the same for all of Texas, coming out of the, just money was being given away in the 80s.
Yeah.
They built so much and then it just stopped, and it just took a while to get that 90s ramping up again.
Yeah. And I mean, we had a deal here in DFW, and it just, it was a 90s deal. There was probably 40 offers on it. And,
I feel, it's funny. I feel like,
yeah.
And I'm just making a generalization. I feel like sometimes you can almost feel like you can get more money on a 90s vintage deal than something that was, say 96 vintage versus 2006, just because you just put 90s and people kind of, their eyes get open. Oh, wow, 90s, go get that. Yeah.
Right. But yeah, I mean, there's definitely a shift, especially, I mean, I'm guessing a lot of this stuff sort of post 2010 is probably a little bit more core, probably more structured parking, more high-rise stuff. Whereas the 90s, that was still sort of a little bit further out, suburban, garden style, walk up, 2 or 3 story. And so there's probably just post-COVID, more people are probably gravitating toward that product more.
Exactly.
So.
And that's kind of what, as the sort of the demand is to kind of get away from the mid-rise infill stuff. And it's viewed as a little safer bet with a garden style product.
Right. Okay. Yeah. So we talked about rents. This was just a quick chart. So, I mean, I think if we can get sort of the supply sort of back in line with absorption, I think this will sort of pop back up.
Yeah.
But I mean, I guess when you're looking at construction, this is a slide out of your market data set. It's sort of, where's the supply hitting right now? And how is that impacting those submarkets? So if you try to segment it as best as you can, sort of where's a lot of the supply hitting and the impact it's having?
Yeah, I mean, and a pretty good example, if you look at the chart, kind of the top right, where we break it up by submarket, you've got, Northeast is obviously leading the pack, Cedar Park, Leander. So it's really, again, like you said, it's Austin it's the low hanging fruit for infill sites are gone. So it's tougher to get infill development done. And a lot of developers have shifted to, let's go more garden style, suburban locations. Their equity favors that. It's an easier story. It's a safer story. And that's, we're typically where the demand is these days post COVID. So it lends to those submarkets. So Cedar Park, Leander have seen a lot. And we're getting to the point now where, Cedar Park is a suburb, which it's its own city. So you're dealing with them when you're going in development, and they're basically pushing back now, saying, if you're doing multifamily, we want to see structured parking. So they're, where it was always tough to do something in Austin, you'd go to Cedar Park Lane or Round Rock, Pflugerville, and kind of build what you want. And now they're starting to have a little bit of hand and push back and say, this is what we want to see. So it's just making it a little bit tougher, but it is those surrounding areas. We've got on the south side, there's still quite a bit of land when you get south of Austin along the I-35 corridor headed down to San Marcos. So, Kyle and Buda, which were one time small bedroom communities, are going to see quite a bit of development continue there as well.
Okay. And then I do want to wrap with, let me see. I'm going to stop sharing. I'm going to do this at my own risk. I want to just pull up just a map of Austin and where most people maybe talk about the surrounding areas and the impact. Like a lot of people, what we saw in a lot of markets, let me go back to my screen share real quick. I'll pull this up. What we saw in a lot of markets sort of post-COVID was that it was more around like the rents in San Francisco dropped, 10%, but then, all the surrounding areas that were like an hour outside of San Francisco, all their rents popped 10%.
Right.
So when we look at Austin and, we've got San Antonio about an hour and a half, you mentioned Buda and Cal and San Marcos.
Yep.
I guess, sort of when you're looking sort of down that I-35 corridor, one of the multifamily guys that I follow, he said Killeen is the sleepy market. Does anybody live? How far is it from Austin to Killeen? And is that going too far? Like, what are your thoughts on sort of this little pocket from, let's say, Killeen, Temple, all the way down to San Antonio along that I-35 corridor? Like, how should people think about that corridor?
We love it. I mean, so my team is based in Austin. We cover Austin and San Antonio as our two primaries, but we also cover some secondary markets, which include Waco, Temple, Killeen. So we transact in those markets and know them well. And it's funny you bring up Killeen as an example. I was checking out the grocery store. It was actually during the storm, a month ago.
Oh yeah.
Towards the end of it, and I was kind of making small talk with the person checking me out, and they were talking about their hours they're doing, and they said they live in Killeen, and I was just blown away. I'm like, my gosh, you drive in from Killeen to work in Austin, and it's an hour, 15 minutes or so. Right. You're not, you're on 35 a little bit of the time, so it's not a bad drive. But I guess the demands there were, but it's those secondary markets continue to grow. Killeen has been that one market where of those three, not to get sidetracked on Waco, Temple, Killeen, but Killeen has been the one of those three that has always lagged behind just because it is so heavily driven by Fort Hood. I mean, that is the economic driver there. And so many people are just scared of that military presence, knowing that they've got a building that could be 100% and, 2 weeks from now it could be 80%.
Right. So there's more military concentration there.
Oh yeah.
And then, I mean, I guess you said people are building in Leander and Round Rock. I mean, Georgetown. So it's just getting further and further north. And so I guess people are saying, well, the rents in Killeen are probably $600 or $700. And then in Georgetown, it's $1,000. So I make the drive, I come in, and there's probably not as much traffic on I-35 between Belton and Georgetown compared to, Round Rock to Austin, right? So whenever I go down I-35, I always just pray that, or I usually just try to take Mo back. I try to stay off I-35 when I'm making that drive into downtown. Any comments on sort of the San Marcos, New Braunfels, even sort of San Antonio area while I have you? Any comments on those? I mean, how should people look at distance and maybe a discount to Austin, right? Because I remember living at UT and, there was West Campus and that was the most expensive student housing market. And then you could live on Riverside or sort of far northwest side, but then you had to take the bus or you had to drive in, right? And so as soon as West Campus cut their rents, Riverside had to follow. Northwest had to follow. Everyone had to follow. So So give me your thoughts on sort of San Marcos, New Braunfels, sort of what discount should people try to buy in those markets, or what
Yeah.
rent discount should they have in those markets?
Yeah. Yeah. That's a good question. And, there probably was a real answer a while ago in today's crazy market, which with just demand and so much capital. Honestly, I don't know if there is one in San Marcos. I mean, we look at, so San Marcos is part of the Austin MSA, and then New Braunfels is part of the San Antonio MSA. So you kind of separate them there. But they kind of mirror each other, where they're both their own pretty good sized market, but they're considered a submarket of each one of those MSAs. But the demand is there. I mean, San Marcos historically has been a student town with Texas State, and that university, which has just continued to explode with enrollment. You've seen a good amount of student housing product there, but we've also seen a good amount of conventional there. And there are some people who choose to live there. They just want to get outside of the craziness with Austin, and it's just you're dealing with driving in. Though there's a little bit of a price discount on rents. On the investment side, I'm not really sure there's going to be much of a cap rate discount on the investment side. And it'd be pretty much the same for New Braunfels, tying in with San Antonio.
Okay. All right. Yeah. I had to just pull up that map because there's
Yeah.
just so much going on. So if people want to, find out more about deals that are happening sort of in that Austin, San Antonio area, what's the best way for people to reach out to you?
Just right there. You shoot us an email, give us a phone call. We're always here.
All right. I appreciate you coming on today, Chris, to give us an update.
Yeah, I appreciate it. Thanks for having me.
All right. Thanks.